Okay, hello everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, July 20th. Michael Boutros here with you this morning. Good morning to you as well, Permendra, Francis, Mark, Eileen. Great to see everyone here in the room. So I just wanted to highlight the economic docket. We're pretty much spent for the remainder of the session today, guys. Really don't have anything on tap till tomorrow. You do get the initial weekly jobs claims, not the bigger print, more so the Philadelphia Fed business outlook, as well as existing home sales and the leading index. That's on tap tomorrow. Relative performance for the greenback looks like this ahead of the U.S. Open. You can see that we're broadly strong against most of its major counterparts, save the pound with an advance of 0.53% on the session. We will talk about that. If you notice, the intraday setups have been really focused a lot on the sterling crosses, and that's just because of the data or the economic streams that we'll be getting this week. So to put things in focus, here's what the employment data for the UK looked like earlier in the session. You did get a stronger than expected read with jobless claims coming in at just 0.4 thousand. Remember, these are new jobless claims, so the smaller the number, the better. While we did get a massive upward reduction, or upward revision rather, for the previous print, you did see that the unemployment number did slip down, or the headline rate did slip down to 4.9%. The larger 3-month on month employment change grew by 176,000. We were only looking for about 73. So largely speaking, you did see the pound find some really nice support on that. We'll go over pound dollar, pound yen, pound CAD. As far as the sterling crosses are concerned, we'll also take a look at the euro crosses. Euro dollar coming into an interesting area of support as we speak, completing 2 equal legs off the high. We'll talk about that. Euro Aussie holding slope support. That was highlighted last night. And we'll take a look at the euro dollar as well as the Aussie and Kiwi setups. Not really too much going on with Aussie dollar and Kiwi dollar right now, but still on the radar for intraday trades. All right, let's jump right in. As always, guys, if you have any questions, specific trade setups or pairs you'd like to review, feel free to post them on the message board as we go through. And also a quick look before we move on the equity board. You're seeing that the equities are snapping back, a nice rebound here across the board in Europe. U.S. equity futures also looking poised to the upside. Dow up about 51 points, S&P up about 5 handles, NASDAQ up with about 13 points as well ahead of the open. So here's what the index looks like so far today. I don't want to stress the 30-minute chart for the dollar index because, again, there's not really too much here on the intraday activity I want to put too much emphasis on. The only thing we're looking at here is we've continued to poise. Deborah, can you please look at Kiwi Yen? Sure. Let me write that down here. JPY. Haven't checked it out lately, Deb, but we'll take a look for sure. Looking at the dollar index, this is the Dow Jones FXCM dollar index. Again, we talked about the break yesterday of the initial monthly opening range. It's also a range that's been in consolidation since the post-Brexit high that we made. There is the break. I was looking, and we looked at this yesterday in the webinar, if you guys recall, at this former channel support parallel to resistance here from the 2013 July highs. Was looking for that to offer some resistance. We couldn't close above it yesterday. We're attempting to do it again today. If we push higher, again, the 2016 open comes in at 12,131, and that coincides with the 50 line of the current operative structure. So what am I saying from here? Not looking necessarily to press a dollar short yet, but I am looking for some exhaustion into this region right here. So heading into the U.S. session, you're likely to see some more upside on the dollar. Again, looking for some resistance near that 2016 open, near that 50 line of the operative structure. Keep in mind, we did get that close yesterday above 60 in momentum that we were talking about in the webinar. Really validates, at least near term, that upside thrust that we're seeing in the dollar index. On the 30-minute, like I said, there's really not much going on for me here, even from an intraday standpoint. You're not at resistance. You're kind of straddling that trendline support. So it's either a rally towards 2016 to look for some new shorts, or if you do get a decent pullback towards 1245, specifically 1264, the breakout zone that we talked about yesterday, might actually be an opportunity to try back on the long side for the dollar. But largely speaking, my preference is to look for the dollar to stretch into a new high to begin, or to look rather for short triggers higher closer towards that yearly open. Any questions on the dollar index before we move on. Not really too much there besides just being poised and ready for some sort of exhaustion stretch in the index. All right, let's jump into yesterday's update. Here's what it looked like last night on the British pound. So heading into the release, obviously, the pound was holding this formation. We wanted to highlight near-term resistance near 31.65 into 31.80 and change, 31.80 being the weekly open that you see there in a dotted line. And that's exactly what we got. We got the stretch into that region. Now, we probed above it, so I don't have a short on, but I'm on the lookout for near-term short triggers. Here's what it looks like now. And again, here's what it looked like last night. So we did make that rally into near-term resistance. This is former support, the weekly open. Again, not really liking the fact that we got out of the range, or the confines rather, of this formation. You can see that it's offering some near-term support. This sets up a really nice session opening range heading into the United States. And what I mean by that is you're either looking for a break of the European highs, and that would give you a continuation. Such a scenario, you're essentially looking for a rally right back towards the weekly high, or a break back below the opening range low for U.S. trade here, and that's going to be right around 31.50. And that would give us, this, again, conviction for a near-term recovery to the downside for the dollar, I guess. So keep that in mind as far as the sterling is concerned. We're sort of flirting with a pretty contentious range here. Again, the weekly open is going to maintain our near-term bearish invalidation. So if you do make it through 31.80, I think this thing will give us a little bit more of a pop to the upside. By the way, such a scenario, if you do see that break, a basic quick retracement off the high here is probably the best way to gauge the upside targets. And if you draw that in, highlights 32.20. 32.70 would be a 50% retracement of the decline off the high. And then the 618 would come in right alongside the weekly high, 33.22, excuse me, 33.21 to 33.15. So levels are pretty good. I'm more inclined to look for a short trigger here as we head into the U.S. Open, maybe a stretch into another high before we turn over. But long story short, if it's going to maintain this downside trajectory, this is sort of where you want to see resistance hold. Maybe sterling just throw over above that pitchfork, Eileen is saying. Yes, and that's why I'm giving this the leeway. You know what I mean, Eileen? So I completely agree with you. This could easily just been a false break, throw over type deal, check the weekly open before turning lower. Here is what the near-term chart looks like on the sterling. Okay, so this is the opening range I'm focused on. More so this region and this region. This is the range I want to see sort of break, preferably after the U.S. Open, to give us a little bit more conviction, more so favoring a downside move here. Now, inevitably, it's important to note that inevitably we would be looking to get long the pound. I'm only looking for the correction here to pull back, offering inevitably much better long entries. At this point on the downside, we want to move that key support level a little bit over to here, just above the 100% extension. That's going to be basic trendline support off the lows and the current median line for that structure that we highlighted yesterday, right there, right around that 129.80 level, just above that 100% extension. An area for me that would be very appealing for possible long entries for the pound. So yeah, Eileen, that could be what's amiss here. I wouldn't put it past it. As far as economic data from the UK is concerned, you still have stuff on tap later this week. Tomorrow you do get retail sales figures for the month of June. You know, health and gauge of the consumer is always going to be something that's going to be you know, important to the central bank. 4.8% is what we're expecting. Slight downward move here from the previous month of 5.7. That's year-on-year ex auto and fuel basically stripping out. So core sales looking for a print of 4.8. That comes out tomorrow. Why do you look for sterling strength, says Mir. Mir, let me ask you, why are you looking for sterling weakness? I'll throw it right back at you. Look, we're not guided by, or let me take a step back. I'm not going to be, I'm not trading pound based on the news headlines and, everything that you're hearing with regards to the Brexit. I'm trading it based on the technicals, and the technicals are suggesting that this thing is a little stretched. You came off of a multi-year. I know I've showed you this before, Mir, but just for your reference again, man, I don't want to downplay this. Okay, if we take this to a weekly chart, just to show you the broader terms of where we are, look where we turned from, Mir. Basic trendline resistance taken off the highs that you made in 1992 and the 2007 highs. If you take that same slope down to the 1985 low, that literally caught the low. Okay. Also, a basic retracement from that 1985 low, the 786 retracement, also caught the low, almost to the pip. Okay. Weekly momentum last week popped right back above 30. Okay. So there's a lot of different things to suggest that this trade is a little bit overdone at this point. I think the fact that everyone is looking for the pound on the short side, everyone's expecting this to fall apart, has sort of been the reason why this thing has found some levitation or some support. Also keep in mind, just price action, 28. We rallied as high as 35, almost 34 and a half. It's almost 700 pips. So I don't really buy this, subscribe to this notion that sterling is just going to, drop into parity because of everything that happened with the Brexit. Near term, let me take a step back, Mir. Longer term, yeah, I do think pound probably makes a new low. On the near term, I don't see it necessarily yet. I'm looking for the pullback. Like I said, I think you get long back towards basic trendline support, equal correction down. Again, like I said, takes in 29.65, 29.85. Nice key region there. I think that's where you find a little bit more of a support bounce. Mir, does that make sense? I don't mean to throw the question back at you, but the technicals are bearish immediately for here. But I think, again, the rally that you've seen, the impulsive rally off the low, looks like a pretty clear 5-wave count to the upside, has me looking and treating this pullback more so as a correction right now. And that kind of bodes well. Is that because you think of dollar weakness? I wouldn't necessarily equate it just to that, Mir, but you took the words right out of my mouth, actually. I was going to say that equates well with what we're looking at in the dollar index, right? Dollar index has some room, like we said, to stretch a little bit higher before it turns over. And that would coincide very nicely here with the pound showing a little bit more weakness to the downside on dollar strength before reversing higher. So the pictures match pretty well. Eileen says, looks like it will break your 131.54 before the open. Yeah, it looks like it. Looks like we're making that break right now. So near term, actually, I do want to just highlight one quick, very near-term retracement off the low here and see what that looks like. There we go. I'll just leave those up. And in fact, let's go ahead and get rid of that 50 at this point. There we go. And that's going to be our new sort of near-term bearish invalidation level. Actually, it's the same one from last night, 31.84. But Mir, he says, okay, right on. Yeah, I don't want you to take the dollar index as sort of a carte blanche against all the dollar crosses, right? It's not necessarily always going to play that way, but it does bode well with our outlook on the dollar, okay? And Mir, at the most basic answer to your question, why are we looking for pound strength? We're in uptrend. We're in an uptrend. You know what I mean? You're always going to be best off buying on uptrend support. Uptrend resistance, not going to be the most conviction sell, but certainly will prompt the pullbacks. But you can see off those lows, there's really not much from a bearish standpoint that's materialized just yet. All right, good questions. And of course, pound is on the move without me. Okay, so near term, look at that little cushion right there. Okay, 131.36 into 31. Near term might give you a little bit of a pop. See if US trade can't get this thing a little bit higher to try to make another attempt at the high so we can get on the short side. But nice 100%, really near term, guys, just within the confines of just London trade. 100% off the high gets you 130, 136. 50% off the low gets you 131.31. Near term might be a decent support zone. Okay, no other questions on the pound. We'll go ahead and move on to last night's, the second update from last night, which was going to be on pound yen. So another wider range ATR. I did highlight this one on Daily FX as well. The daily chart showing us coming into a 38.2 retracement of the Brexit decline, failure to close above, momentum kind of getting tired here. The risk was for a pullback in my mind, and it still is. I know that we broke to the upside on the data last night from this near-term basic trendline resistance, but the premise of the idea was to try to get as deep into this 37.60, 37.90 zone as you can for a possible long play. You came into this slope support where we found some more stringent support, and then obviously the data prompted a break to the upside. Here's what pound yen looks like right now. The levels are unchanged, and the outlook is unchanged. I think near term, you still want to treat this pretty similar to what you're treating the sterling, okay? I'd be looking for a more prominent pullback eventually to get long. That does coincide with the outlook that we're holding both on the dollar yen as well, on a sort of a near-term move lower before finally giving us a much more substantiated rally. But looking at this in comparison to where we were yesterday, you know, you can see we came right into that basic parallel support. Took a break right through basic trendline resistance off last week's high. And again, the short bias, or the long bias rather, is still vulnerable, meaning I'm still on the lookout here for possible short triggers well below the weekly open. You actually had a decent trigger break to the upside here as well as we tried to make our way through essentially what was the Asia opening range high. But nothing has changed here as far as pound yen. Still looking lower for a possibility of long triggers. Again, this is the major key support you'd need to get through to validate a much more substantiated drop. If we do get sub 37.63, I'd be looking to play that drop into 34.18, 34.20. And this is, I think, where you'd start to look for a much more substantiated long entry. Wouldn't be a scalp. I think if you get down here, I think the long entry would be a little bit more of a longer term play. But you can see basic median lines, guys, how these can be of such help and guidance for us. All of the median lines you see presented here are derived off this one slope. All right, so if you take this slope, mirror it to the high that you made there on the 6th of June, you can see some nice pivots. Just another spike high. You can see that that coincides with that key support zone, extended off the low that we made last week. Midweek, right around the 13th. That's exactly the low we caught. Take that same slope way back to the Brexit low. Well, you got some really nice touch points there, and so forth, right? All the same slope. So it gives you conviction on the upslope. You'd be looking to buy upslope support. Try saying that 3 times fast. But that takes you down a little bit lower from where we are now. And again, I think you'd be looking for long triggers into that region. Topside objectives, once you get through the weekly opening range, 140, 130, you're looking for just the swing high, 43.22. And then a major resistance confluence Fibonacci levels is up here at 44.35, 44.48. So pretty clean, in my humble opinion. You've just set the weekly opening range, and you're kind of sitting in that range for now. Inevitably, we're looking to play the upside, but near term, you do risk a little bit more of a drop here. Remember, you got retail sales on tap tomorrow morning from the UK. Any questions on pound yen? So my notes say lower to get long. Okay, we covered pound yen, covered pound dollar. Okay, I do want to touch base on pound CAD. Here's what pound CAD looks like. If you guys remember this setup from a few days ago, we'll come back for EURAUD, but the intraday update from the 18th. had a nice pound CAD setup, and this is what we were looking at. I just wanted to highlight this, guys. As in classic fashion with the sterling, you made a false break of that lower triangle support. Again, keep in mind that the weekly open was right there as well. Here's what it looked like. Yet last night, I guess, right after the close of U.S. trade, he broke below it. It acted as resistance at first, and I was really, really tempted to get into this trade, except the fact that you continue to mark, it wasn't very strong divergence, but very slight divergence here into that low. Momentum was actually making a much higher low. So I kind of got shied away from it. Good thing I did, because again, obviously we broke to the upside here in European trade, taking us right back into the monthly open. So for me, same thing here on pound CAD. The broader uptrend is what's favored. You're in this consolidation until you break out. Breakout levels haven't changed. You're looking for either a topside move and a test of this as support, which would be your entry for the long. Or if you get something like this with a little bit more conviction on a break of that support and test it as resistance to play the breakout. Either way, the range here is pretty impressive, meaning if we do see a topside breach of the formation, a measured move of the width of this triangle formation takes you as high as 78.40. Okay, same thing on the downside. If you do break the downside, you're looking for a target, a measured move well beyond the lows. Okay, in fact, let's just see what that target would look like. Yep. That would take you all the way down 161.40. Okay, so it really just shows you the width of this triangle and the consolidation that we've been seeing and the potential it has for the breakout play. So at this point, I'm willing to shift this a little bit towards the lows that we made last night just to account for recent price action. It continues to highlight essentially the weekly open, which converges in time and slope later in the week with that lower triangle support somewhere around that 170.60, 170.50 range of key support here for pound CAD. So continue to, again, we can play this range within the confines of the range until the breakout. Don't necessarily need to wait for the breakout. Buying near slope support, selling near slope resistance on a conviction trigger, no problems. But just be mindful of the potential that it has on the breakout here for pound CAD. Any questions on pound CAD? Okay, that's pound dollar, pound yen, pound CAD, and I think that's all the pound crosses I have covered. Let's go back to last night's update on EURAUD. Here's what that looks like. If you guys recall this earlier in the week from the 18th as well, we were talking about very similar, a very basic triangle formation with a topside break seemingly here, breaking through resistance, checking as support, the measured move of this play. And this is a conservative measured move. I could have taken it from this low, but I typically like to take the inside. So here's the inside measured move, gives you the targeted range of 147.44 on that breakout type of play. Well, you got that. And from there, you got a little bit more of a mean reversion turnover. Okay, so here's the trade now. You saw that topside break after testing its support. We came right into 47.44, nice confluence region of resistance. And we got the pullback. Last night, we were looking at this. The pullback coming into basic trendline support. It also completed a basic 38.2 retracement of the advance off the lows. And we're looking for long triggers, bullish invalidation down at 45.96. So you're getting that pop higher now. It's not giving us much, but keep in mind that I have a much wider ATR here, so this move still constitutes a pretty hefty move from 46.70 into 47.20 or so. But the long and short of it is you're still at risk below this region. And for me, looking at EURAUD at this point with what Euro's doing, I do like the idea of having a Euro breakout. Mir saying, do you have any inclination that sterling CAD, or should we just trade the breakout in whatever direction? I favor the long side, Mir. I thought I said that. So of the formation here, I favor a long side break. Okay, now it's pound, so you never know. You could get a false break to the upside or a false break to the downside beforehand. But for me, if you look at this on a broader structure, it's very similar to what we're looking at with the dollar, with the pound dollar, right? Pound yen. It could see a mean pullback first, but I'd be looking to buy a rally into support on both pound CAD and pound yen. Make sense? Going back to Euro Aussie, you got it, Mir. Appreciate that. Going back to Euro Aussie, again, there's really not much to do on the immediate term here. I do want to highlight the daily chart that we were looking at last night. Here's what it looks like. I think Jamie highlighted this as well in his piece. If you guys recall earlier in the week, we just talked about basic trendline support. Nothing fancy, nothing too intense. The low day close for the month comes in at 45.08. We want to stay constructive above that. You saw that break above the median line. Yesterday's rally tagging exactly the upper median line on the daily chart here. A sliding parallel extending off the high that we made on the 6th of June, okay, gives us a little bit more room to the upside with that low that you made in June, and that's right around 47.97. That's why near term, I have this highlighted here. That's what this slope is this slope right here. So for me, I do think that you could spike through this high, find a little bit more of a stringent resistance there before making a larger move to the downside. But long story short, you stay constructive above yesterday's low near term. And again, the only thing I just want to note, let me take a step back here, guys. The only thing I want to note is this also. You have a simple A, B, or a 1, 2, 3, 4, 5, whether you want to count 1, 2, 3, 4, 5, or the larger one. For me, correction would still have us sort of coming into this high, making a new low, and then trying to run on 47.97. So kind of split here on Euro Aus. As a disclaimer, I haven't taken anything on this for the last couple of days. Still waiting to see a little bit if I can catch a decent entry on it. But keep in mind this consolidation that we're running into. 47.44 into 55, key resistance still. And then a break of today's low would give us that spill back. Again, if you get into 45.90, basically the weekly opening range high, near last week's high, I have an area of which I'd start to look for some possible long exposure. Any questions on Euro Aus? Before I jump into any crosses beyond this, I do want to take a quick look at Euro Dollar and why this is might equate decent to what we're seeing there. Euro Dollar, while it's been super messy, and I haven't highlighted it on the intraday charts for some time, as you guys are aware, is coming in some interesting areas of support as well. Okay, first of all, this 109.75, 109.80 region, exactly where we just bottomed in overnight trade. That constitutes 100% extension from the decline off the high, specifically the high that we made in July. And it's also an exact 764 retracement of the advance off the Brexit low. So you can see a real stringent rebound off that in overnight trade. If Euro is going to find some solace off that, if we're going to find a little bit more of a pop higher, this is where I expect to see more of a stringent support hold. If we break below this, I really don't have anything until the 109 handle, essentially 109.09. If you bring the 88.6, it'll probably be somewhere around 109.30, 109.40. So you have some targets, but this is pretty big near term. So I do like the fact that you're marking divergence all into these lows, price action making a lower low, a lower low, a lower low, the oscillator making a series of higher lows. Tells you the downside momentum is waning, and I'd be looking for a pop higher against 109.75 essentially for the euro. So the reason I bring this up right now is because if you do get that topside break of the opening range highs for London, for Asia, for me, that might be an indication that EURAUD might not make that turn lower. Okay, it might be an indication that this thing is en route to 47.97, and from there, a little bit more of a stringent pullback for EURAUD. But just keep that in mind here as we continue to track both the euro and euro Aus. I do like euro dollar finding some more support, keeping the pair well poised above 109.75. Also note that the daily chart struggling here to close or push below 40. We'll want to see what the close looks like today. If it holds 40 support in momentum, further validation or further conviction that the near-term short bias is continuing to wane here for the euro dollar. Any questions on euro before we move off? So you would think, just generally speaking, you would think that euro dollar support would suggest dollar Swiss resistance, but dollar Swiss ain't really doing that. She's peeking over something very interesting here, and obviously the level of invalidation that we talked about earlier in the week has given out. So if you guys remember, or I did highlight this last night actually, let's go to that real quick. Here's what dollar Swiss looked like last night. And we were looking at this earlier in the week on the Sunday update saying, look, we're looking for an early week high. The long side bias is vulnerable below 98.80. And, you know, let's see if that gives us a little bit more of a stringent pullback. You got a decent rally right into 98.80. I think the high was 98.76. You got a mean turnaround that took you right down into 98.40 again, right here. Failure. Pull right back. And then we were sitting here last night, and I just wanted to highlight, look, I mean, the long side bias is still vulnerable below this region. Just so happens, continue to hold that 50 line and slope support, broke through, messiest breaks. You know, I don't really like to see the breaks like this per se, but here we are. And the push through coming just shy of the 99.06 target, which is still the next upside resistance, backed by 99.21. It's the May high day close. It's a much more significant region of resistance. But long story short of it, guys, you stay constructive now above 98.66. Okay, so with the euro dollar doing what it's doing, I would expect, again, you know, you could see this thing travel a little higher, push into that 99.21 region before turning over. But, you know, I'm not really too keen on getting super aggressive long dollar Swiss despite the breakout. And even in momentum on this new high, you know, if we were close at these levels, you'd be marking further divergence with that previous high that we made for the month. Here's what the daily chart looks like, by the way. There's the May high day close at 99.21 and a key 618 retracement. This is of the entire 2016 range. That gives you 99.46. So looking a little higher here in dollar Swiss for possible resistance just above the 99 handle. Maybe it's because of dollar pushing dollar Swiss and lower euro dollar. Yeah, I mean, I'm sure this is attributed, Eileen, to the dollar strength that we're seeing broadly based. Keep in mind that the Swissy is not represented in the Dow Jones FXCM dollar index. That index is just the euro, Aussie, sterling, and yen. So I'm very mindful of that, correlating any type of moves that you see in that index with dollar CAD, dollar Swiss, Kiwi dollar. You want to just keep that in mind that that currency is not represented in that index. But with that said, yeah, I think obviously this is more so dollar pushing this thing necessarily than Swissy weakness. Are dollar futures more pure than FXCM index? Not sure what you mean by that, Eileen. Are you talking about the ICE dollar index in the futures market? The DXY is the more popular traded, more widely used index, guys, obviously for the dollar. If you're talking about purity of dollar movements, I would say the dollar index for the Dow Jones FXCM one is more accurate on account of one simple thing, Eileen. The ICE dollar index, or the DXY, is a basket of 6 currencies. But more so than the fact that it's all 6 currencies is that it's extremely weighted heavily the euro. It's like almost 50%, maybe even as far as 60% weighted the euro. It's because it's based on volume and how much trade is coming on all of those pairs. And obviously euro dollar is the most widely traded currency on earth. With the dollar, that is. So with that said, as far as purity of base dollar movements, I actually do like looking at the Dow Jones FXCM dollar index. I think that's a little bit cleaner. It's the 4 most liquid, most fluid currencies against the dollar. And not only that, at its inception, Eileen, they were equally weighted. So there's not one currency that's really going to shift the ball here. So for example, when you saw the Brexit move, obviously the dollar index reacted in kind, the dollar index, right? But if you were to take that same move, for example, if it had happened to the euro and you looked at the DXY, it would have basically been an inverse of the euro dollar. Okay, makes sense with the equal weighted then, right? Okay, cool. Good question. Good question. Again, as always, I just want to stress that we don't really want to put extra emphasis on the index controlling carte blanche all the dollar crosses, right? But certainly can give us that really clean look at what the base dollar move is. So that is dollar Swiss. Any questions on that? Interim resistance 99.06, major resistance more into 99.29, that May high day close, and an area of which you'd start to expect a little bit more resistance for Swissy. Okay, let's just touch base real quick on the Aussie and the Kiwi. Kind of boring trades as of late. If you're not already on the short, I don't think there's anything to do here. If you're looking for some new fresh exposure like I am, I'm looking for some support near term heading into the monthly open. That's right here, 74, 51, 74.46 is the exact 618 retracement of the advance off the Brexit low. And I think that's where you should be looking for a little bit more of a stringent support structure. If you look at the Aussie, we've been tracking it obviously since the Sunday update, but it was latest highlighted here on the radar charts 2 nights ago. So we made it through that 75.34 barrier that was right here, kept the downside bias in play, targeting 74.90, and the gap here at 74.70. It's what we're testing now. Here's this area of region of support. And if you zoom this out long enough, I know there's a lot going on in this chart, guys, so bear with me. I guess bring this out to a 2-hour. Here it is. This 50 line is what I wanted to highlight it. Okay. So if you follow that 50 line, you can see that we're coming right up against it, basically where we are now. Just below that is the monthly open and the key 618 retracement. So could find some support there near term for the Aussie dollar. You know, it's been a great play. I kind of jumped out way early on the shorts. Definitely should have held that a little bit longer. But if you look at this on the daily chart, remember we talked about it last week, guys. An outside day. We talked about it on Monday's webinar. An outside day key reversal off of major resistance confluence. You know, these types of developments are as bearish as it gets, followed by a trigger break. And now the downside coming into, we already broke through the initial area of support, now coming to the secondary area of support here. Monthly open, median line support. Aussie dollar could find some near-term lows here in price near 74.50, 74.46. So Eileen, did that last question, did I answer your last question there for you? Near term, no. Near term, I wouldn't be looking to take on fresh short exposure. Remember, this is already working on your 4th consecutive day of declines, and you're coming into a key support. To take a step back, Eileen, trading is always going to be a series of if-then statements, right? If we do break sub 74.46, I would be looking for a rally back towards that region to sell. And in such a scenario, we're going to go ahead and bring it up. I don't want to do it now because it's going to, you know, mess up or messy up the charts, but you're going to bring up your 764 retracement. You're going to look for that low there. Subsequent median line here would be the next area to look for as support. And then a little broader key 618 off the lows that we made would be somewhere around 73.36 or so. But long story short, I'm not looking for short exposure from here. Into this region, I'd actually be looking for long triggers. If we don't get any and it breaks right through, there's nothing to do here. You have to wait for a rebound or recovery back into structural resistance, and then that's where you'd start to look to pose some new fresh exposure. If you're holding shorts already, for those of you who are still on the short, I'd be bringing my stop down to the opening range high for Asia, looking for a target I would be putting it right at the monthly open, 74.51, 74.50. Oh, okay, makes sense. Thanks for the extra explanation. You're more than welcome. Yeah, I think we have to be on the same page here for sure. And again, from here, Eileen, I think it would be more of a chasing trade, even from a scalping standpoint. You're at the lows of the week. You're actually at a 2-week low at this point. Or you beat last week's low, let's say, and you're coming to structural support. So near term, I'm mindful of that, and I do think you look for that monthly open to give you a little bit more, excuse me, of a support hold alongside that key 618 retracement. So that's Aussie. Moving right along to Kiwi. Aussie, by the way, one of the cleanest daily charts that we've seen, continues to act, textbook within the confines of the formations that we've been following. Kiwi dollar, a little bit of a different story. It's been a sort of slow grinder to the downside as well. Here's what the 30-minute looks like. And another trade that we've been following for a couple of days. Here's what it looked like earlier in the week on the radar charts. We were just making a break of the initial weekly opening range. Your bearish invalidation level, I think, remains unchanged. Whoops. Yeah, actually, I would bring that down to the high that we made to the high we made last night, right around this region. Nice pivot in price. That's the initial weekly opening range low. It would necessitate a break back above this trend line, which is former trend line resistance. We've acted as a pivot along it. Support, support, break, resistance. Stay bearish below 70.60 basically. And I'm looking for still a final move or a final drop into 69.70. That's this region here. This is the, if I'm not mistaken, the Brexit low, right? And the lower parallel for this formation we've been following off the highs. So it sort of coincides very well. This is a 2-hour chart, by the way. If we bring it to a 30-minute, see what near-term price action is doing. You can see it's been a whole lot of chop. Whole lot of chop. Now, keep in mind, tonight is big event risk from New Zealand. It's not the interest rate decision, but it's a new report called Economic Assessment Update. And basically, the RBNZ will be releasing the new and revised metrics on the economic assessment. This is something that we've not really seen from the RBNZ before, so it's going to be interesting to see what the reaction is. Wheeler is known. We had him on the wires a couple of days ago just for talking down the currency and being able to implement policy just by his rhetoric. So we'll see what this economic assessment update has for us. That's later tonight. Should offer some serious volatility in the Kiwi crosses, specifically with what we're doing right now. Okay, so here's the update. Comes out at 1700 Eastern time. Again, it's about 5 p.m. Gives you the RBNZ, publishes the assessment of the economy. And again, this is a new brief that comes out from the Central Bank of New Zealand. All right, so keep that on the docket and watch this thing. Could definitely charge some volatility. And just as a caveat here, again, my humble opinion, if we're trading around these levels into the release tonight, and you get the comments spiking down into this region, I actually would be looking to fade that move on a long, especially if the comments charge further declines. Keep in mind the daily chart and how far we've traveled already. Okay, this would be, if we close at these levels, the 6th consecutive day of declines for New Zealand, and certainly, a dip into that key region 69.69 for me would be an interesting area of support on the daily chart. That's right here. Start to look for a little bit more of a rebound, possibly as high as 70.58 again. Bodes real well, right? Matches with our outlook on the dollar. Some more dollar strength near term, pushes this a little bit lower, get the dollar kickback. Nice little pop-up here in Aussie, maybe a pop-up in Kiwi. Now, obviously, looking at Aussie dollar and Kiwi dollar making these moves, Aussie Kiwi has been something that we've been watching very closely here on SB as well. You know, massive breakout off of a critically important slope level that we've been following literally for over a couple of years now here. And definitely, you know, failing at the 2016 Open, we have not been able to close above 106.62 despite a rally as high as 107.68. And, you know, with what we're seeing in Aussie and Kiwi, I think you see a little bit more chop sideways. The 30-minute chart has a basic slope off the lows here governing the advance. At this point, we want to bring up sort of near-term key support right around that 105.95, essentially the 106 handle. Basic 38.2 retracement of the advance off the lows. Basic trendline support off the lows. Nice pivot in price as well. That comes out a little bit higher, so right around 106.06, but you get the picture. Okay, so we did Aussie, we did Kiwi, we did Aussie Kiwi. I want to jump into Deb's question. Deborah, are you still here? Kiwi Yen. Let's look at Kiwi Yen. Okay. Kiwi Yen. Yes, Kiwi Yen we had on the radar charts not too long ago. Where is it? Kiwi. Right here. Boom. Sweet. Okay. If you guys remember this setup from, from last week, we were actually, look at the text here, we mapped this out during a webinar. Immediate risk is for a move lower while below 76.70. Actually, that's so cool because we actually topped out at 76.70. So we took down all those downside targets. 74.70 was the last one last week. Late in the week, we closed right below. And here we are this week checking former channel or median line support as resistance, rejection, and a continued move lower. So where do we go from here? Well, I can tell you this, Deborah, the levels haven't changed. So if you go to the intraday page and you click on the second radar charts from the 12th of the month, that Kiwi chart, actually the levels are exactly the same. From there, and obviously, as usual, you can always take a picture of any of the charts you see here, guys, by clicking on the camera button if you need it for future reference. All right, bear with me one sec. I just want to see what this looks like. Can a break of the weekly opening range, if we were to break 74.20, 73.70 would be sort of an area I'd be looking at. The monthly open comes just lower at 73.50, big region right here. As far as resistance is concerned, you'd have to look here alongside the weekly opening range high. And momentum signature, some divergence into this high. You already got the move to the downside. So here's what I'd say on this one, Deb. I would say that the, I hope you don't mind me calling you Deborah. Here's what I would say. The immediate risk, in my mind, would still be on a move lower. And I say that not only on the account of the outlooks that we're holding both on Kiwi dollar and the yen crosses in general, but also near-term momentum here that you're seeing sort of 60, really act as sort of a ceiling as price continues to try to attempt to push higher. For me, you would need a breakout of 75.50 to get validation for a reversal. That being said, risk remains to the downside before a move higher. Monthly opening range high comes in at 74.27. Oh, look at that. Let me put that on here as well. And now that we've made this move, I'm going to apologize one more time. Let's clean this up. Okay, either way the same level comes up. Either way the same level comes up. So 75.50, 75.60, still going to be 50% retracement, the upper parallel. Okay, so these are the amended levels, Deborah. I would take a snapshot of this if you need it. This is what I would be working with moving forward from here. Initial resistance I would still put at the weekly open, just because of the lows that we made last week, but also just because of the precedence of the weekly open, 75.22, let's call it, with bearish invalidation at 75.50, 75.60. Deb is great. Everyone calls me that. All right, Deb, right on. Deborah says the 4-hour chart is different than the 1-hour chart and a daily. It's confusing. So, Deb, you need to figure out what your time horizon is. If you start looking, this is a great topic, by the way. If we start looking at too many time frames, Deborah, this is not just confusing to you. It's confusing to everyone. It's confusing to me as well. Why? Because momentum on a 4-hour chart will be independent of momentum on a 1-hour chart, will be independent of momentum on a 30-minute chart. And where one looks like it's got a bearish signal, one looks like it's got a bullish signal, the other one is indifferent, right? So it's called paralysis by analysis. All of a sudden now, you know, you have a clear picture on the 30, you zoom out into an hourly, 4-hour, now you have no clue what's going on, right? One looks bearish, one looks bullish, and you know, you throw your hands up, you don't know what to do. If we're working intraday, we need to focus on what's happening in the near term, what's happening in price. When I'm looking at a 4-hour chart, or for example, when you guys go to the intraday page every day, right, and you check out the intraday charts, the reason I put a 120-minute is not so you can look at the indicator. It's not so you can watch, you know, it's for you to make any judgments on near-term bias. The reason I put the 120 is so you can see the larger structure that we're trading within. That's it. I don't want you to stress the momentum indicators on these. I don't want you to stress, you know, this is not what we're using to ascertain bias. This is simply, look, I just give you a larger picture out so you can see the broader picture of what we're looking at. Then the 30-minute is what we're going to be looking at more so for intraday. That being said, Deb, that's sort of where the multi-time frame analysis works. The daily chart maps out our key levels, and then we go into the 30-minute, and that maps out sort of our right and left turn, as it were, on a map. So if we look at this, just for argument's sake, for a 4-hour chart, does look a little different, but everything as far as structure is concerned still suggests the same thing. You're coming off of channel support, so you'd expect to find resistance at channel resistance. There's a confluence, the 50% retracement of the decline. There's the weekly open, initial resistance. Momentum, well, this is as benign as it gets, right between 40 and 60 since the start of the week. Gives us a lateral or a flat momentum reading on a 4-hour. Again, not telling us anything, right? Intraday, this thing could rally 100 pips. You wouldn't even see it represented here necessarily on a 4-hour. So we want to make sure that we're keeping, if our goal is an intraday trade, our goal must be, or our focus must be more so on near-term price action. If you're looking for a trade that's a wider scale trade, a swing trade, a more buy and hold type of position, you're looking for a 200-300 pip move, and that type of strategy, Deborah, you don't necessarily want to stress a 30-minute chart, right? Because you don't want to listen to all that noise in near-term price action. I'm looking for a big hefty move. I'm looking for a more moderate weekly move. You know, I don't want to be looking at what's happening between now and Asia. I want to be looking at what's happening between now and tomorrow. So cater what analysis you're looking at, what chart you're looking at towards the time horizon that you have per the trade, right? Doesn't make sense for a larger, longer term trader to look at a 5-minute chart. Same time, doesn't make sense for me to be looking at monthly or even weekly charts on a daily basis if I'm scalping. So I hope that answers your question, Deborah. I hope it offers some clarity. I know what you're going through. It can be a little overwhelming sometimes, specifically when you sort of map out a really beautiful setup, and then all of a sudden you look at a 4-hour or a 2-hour, and now you're not so sure anymore, right? That's completely normal. Just keep your focus on the time frame or the time horizon that you're looking to execute on. Okay, so we are running towards the end of the session here. Some quick notes on gold and crude, and I'll let you guys go. Here's what gold looks like. An outside day reversal here today. It's not off resistance, so remember, it's not necessarily going to be the most crazy development, but certainly the move lower coming into our initial area of support. That is 1308 into 1303. We've been talking about that level for weeks now. You have the upper parallel, former resistance, now support, a basic 38.2 retracement, and the the May highs at 1303, all coinciding with basic trendline support over the next few days. So looking for that 1303, 1308 target on gold near term on a move to the downside. Crude also reacting to near-term support. Okay, as we said and as we've continued to say here, I do like crude lower. So we've seen that little bounce off that key support confluence that we highlighted a few weeks ago. Hasn't really given it much thrust to the upside. Bearish invalidation still at the monthly open. A downside break from here. You're looking for channel support, which comes in right around 43 at this point. More importantly, 4109 into 4186. Nice Fibonacci confluence of the 1618 extension from the decline off the highs and a basic 38.2 retracement of the ascent off the lows. Any questions on crude or gold? So go get your pound pips. Wishing you a lot of them today. See you tomorrow, says Eileen. Hey, same to you, Eileen. Always a pleasure. Guys, don't forget, 1 p.m. Eastern, Jamie will be on with his midweek strategy webinar to go over some of the swing setups that we've been following over on SB and the outlook for the majors ahead. Again, remember tomorrow, again, some more UK data with those retail sales coming on. We'll continue to focus on some of these sterling crosses heading into the close of the week. Best of luck trading, guys, and I will see you tomorrow morning. Cheers.